Hi, my name is Allan Madan. I'm a chartered accountant and a tax expert in the Mississauga, Toronto, and Oakville regions of Ontario, Canada. In this video, I'm going to walk you through step-by-step how to prepare financial statements for your small business or corporation. Let's get started. The first step in how to prepare financial statements for your company is to get yourself organized. You can do this in 3 easy-to-follow sub-steps. Number 1, locate and sort all of your expense receipts by month. I have a habit of putting the expense receipts by month either in a folder or in an envelope for easy storage and location afterwards. Step 2, print all bank and credit card statements and sort them by month. 3, attach all receipts to the related credit card or bank statement. This makes it easy to identify how a particular expense was paid and when it was paid. The second step in how to prepare financial statements for your company involves preparing the expenses spreadsheet. In this example, I have used the business of an IT contractor and independent consultant. He is registered for HST and is collecting sales tax from customers. You'll notice in this spreadsheet I have subdivided the expenses by 3 main categories. Your categories may differ than mine. Here they are: car, operating expenses, and home office. I have further subdivided these categories by expense item. It's a best practice to prepare this spreadsheet on a monthly basis. This will save you time, effort, and money at the end of the year. For home office expenses, I have only included the deductible portion on the spreadsheet. The deductible portion is equal to the size of the home office relative to the size of the home. So for example, my IT contractor's den is 10% of the total size of his home, and therefore he's only deducting 10% of the home office expenses. Let's look at a particular line item on this spreadsheet. Gas. In total, my IT contractor spent a total of $2,627 on gas purchases for his car in the year. He paid for it by Visa, $1,748, through his business bank account, $879, and he had followed my advice and didn't pay cash at all. You'll notice at the bottom of the expense spreadsheet, I have subtotals. In this example, the total amount spent by the IT contractor in the year on business expenses was $13,906. The third step in how to prepare financial statements for your business is to calculate the balances of the special accounts. First off is HST payable. In this example, the IT contractor has HST payable to the Canada Revenue Agency of $11,301. HST payable is calculated as the total HST collected in the year less the HST paid during the year. HST paid during the year is on the business purchases shown in the previous spreadsheet. Next is income tax payable of $8,600. Income tax payable is equal to the income tax expense of $13,600 less tax installments made by the IT contractor of $5,000. Income tax expense can be obtained from your accountant, or you can calculate this amount using a corporate tax return preparation software. Accounts receivable is the next special account. Accounts receivable represents the total invoices issued during the year less cash collected. My client has accounts receivable of $10,000. Next is accounts payable. My client had unpaid invoices in 2012 representing $3,256. This is the amount owing to my client's vendors or suppliers. The last special account is shareholder drawings. also known as dividends paid. My client withdrew $73,796 from his business checking account during the year, and he only contributed $4,000 to his business checking account during the year. Therefore, the net drawings or dividends paid during the year, which are taxable to him, are $69,796. The fourth step in how to prepare financial statements for your business involves calculating depreciation. For tax purposes, depreciation is known as capital cost allowance and represents the decline in value of the assets during the year. My client had 3 tangible assets which were shown on his expenses spreadsheet: desk, computer, and software. The depreciation rates are 20%, 55%, and 100% respectively. You can obtain the depreciation rates for various asset types from the CRA website, the link which is shown on the screen. In the year of acquisition, only half of the purchase price can be claimed for depreciation. The desk depreciation or capital cost allowance in this example is only $70, and it's calculated by multiplying the rate of 20% by $350. The total depreciation or capital cost allowance to be claimed is $352 on all 3 of these assets. The fifth step in how to prepare financial statements for your company is preparing the income statement. The income statement represents the amount of profits earned in the year, of $73,541 in this example. Profits are equal to sales, less expenses, less income taxes. Revenues of $100,000 in this example represent invoices issued during the year and not necessarily the cash collected, which could be different. The depreciation expense is linked to the depreciation tab shown earlier by way of a formula. The other expenses are linked to the expenses spreadsheet shown earlier. You'll notice that all of these expenses do not include HST. And finally, they do not include the tangible asset purchases shown previously. The sixth step in how to prepare financial statements for your business is the preparation of the balance sheet. The balance sheet is arguably the most difficult of the financial statements to prepare. The balance sheet consists of 3 separate areas: assets, liabilities, and equity. You'll notice that the assets, $26,902, is equal to the sum of the liabilities and equity. If your company's total assets do not match the sum of liabilities and equity for the company, then you've done something wrong. Cash is taken from the year-end bank statement. Accounts receivable is linked to the Special Accounts tab. Physical assets are linked to the Depreciation tab. The accumulated amortization represents the depreciation taken since inception. In this case, the accumulated amortization is equal to the depreciation expense for the year, since it's the first year of the company's operations. The liabilities are also taken from the Special Accounts tab. Equity. Equity represents the cash and assets retained in the business, and it's a formula. The equity is equal to the net income for the year, $73,541 taken from the income statement, less the dividends paid in the year, $69,796 taken from the Special Accounts tab. This company has equity of $3,745. On your screen, you'll notice a link to download this whole spreadsheet. You can use this as a template to prepare your company's financial statements. Thanks for watching. In my next video, I'll be using this very same financial statements to show you how to prepare a corporate tax return. Also, get access to your free report, 20 tax secrets on how to beat the tax man, the link for which is shown at the end of this video. Finally, please like, comment, and subscribe to my videos. It helps me produce better and greater content for you. Thanks for watching. See you next time.